Think big. Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem. Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. Right. Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. Right. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
Yeah, but we gotta kill him, motherfucker! We gotta kill him!
Buy low, sell high. Sounds easy, doesn't it? Why is this the hardest thing for most people to do in the market? We're going to dive into that a little bit today. But before we do, my name is Maestro. Thank you for tuning in to The Long and Short. What we're going to cover today is a pretty good hodl strategy on knowing when to buy and knowing when to sell. All right. And I think that this is pretty much the only strategy you'll ever need. And the reason why I say this is because I really haven't seen anyone else do this on YouTube or anywhere else. So what I'm bringing to you today hopefully enlightens you a little bit. And if it does, then go ahead, hit the like button, hit the subscribe button, hit the bell notification, and you will get notified when we bring content like this to the table. All right, so let's get right into it. No time to waste. Let's jump into why buying low and selling high is so hard. I think it's 2 points that we need to consider here. The first point is social media, FUD, FOMO, and how that plays on your emotions, okay? The second part are the charts. Now, I can give a real quick example on how this works, okay, and how you may have been made a victim of buying high and selling low. So here's the example. Let's say, for example, you're investing in crypto, you know a few people who are doing it, and one day your friend comes to you and says, hey, man, you know, X coin went up 1,000%. You're like, whoa. So you're like, man, I need to look into this thing, right? So you're not so in tune with the market, right? You haven't really gotten very deep into research, right, for new coins and things of that nature. So you ultimately go to the next best place to do some research. And what is that? YouTube. Now, YouTube is a wonderful place where you can learn about all types of things, but a very, very weird thing happens when you search for particular coins, right? Here's a social experiment. Go ahead and type in Dogecoin, type in XRP, type in Cardano, okay? Really any cryptocurrency that is in the top 100, and you will find someone who is a complete shill of that coin, all right? Now, the YouTube algorithm is designed to give you the authority on a topic, right? That's why YouTube and Google is so good, because they find the authority. Well, the spiders crawl and find authority based on how much information you're able to provide, right? Actual information that you're able to provide on a topic, okay? So if you type in something like Dogecoin, chances are the first few videos that come up on whatever you're researching on Dogecoin are pretty much shills of the coin, right? Just do it. Stop the video, go, I don't care, just go check it out for yourself, right? What I'm saying is true. So if you're listening to a shill, they're going to pump the coin. Your friend pumped the coin. So what's the next step? Okay. The next step is to go to where? Coinbase, you know, Binance, wherever you're buying the coin. And if you look at the chart's going to tell you happy days. Everything's up. Things look beautiful. Yes, sirree. I think I need to buy this right now. And so you get in, and what happens in a week? Your portfolio's down, the price crashed, something happened. And who do you have to blame for that but yourself, right? That's what makes this difficult. You buy into the hype, you find the shill, you think you're doing research, but you're not really diving into the levels that you need to. And you don't really understand how the market works. And the people who are really playing the game, they take advantage of that. And that's why you get hurt. So how do we change this, right? How do we switch this thinking? Well, basically we have to take the emotions out of the equation, right? We have to develop rules, okay? I can tell you from experience, developing rules allows you to take the emotions off the table, okay? And if the rules aren't working out for you and you keep losing, then adjust your rules, adjust your strategy, right? You can't adjust your emotions and you can't get rid of your emotions. If you get upset about losing money, you're human, okay? Congratulations, right? But in order to take those off the table, we need rules, right? And your rules are going to allow you to think contrary to what's happening on social media with the FUD, the FOMO, and everything else, right? So What I'm going to show you guys how to do is a very simple step-by-step process on how to achieve these two things and get out of the herd, right? Strategy is very simple, all right? We're going to cover it here quickly and then we're going to demonstrate it. We're going to use the Fibonacci tool to outline the daily range. And this range, you can use some discretion and kind of pick your own range depending on what you're trying to do. So we'll explain this, okay? Also, you can mark off the 100%, 75%, 50%, 25%, and 0% lines within that range, okay? Once we have that, we'll have a 50% line. Anything above that 50% line is considered a premium price. I am not buying. Anything below that line of 50% is a discount price. I'm buying all day, right? Now, if we use these rules and we ignore the FOMO and the FUD, we will be able to trade and buy low and sell high accordingly. So let's just take a look at Bitcoin, for example, okay? This is Bitcoin for the year of 2021. If you take your cursor and you kind of line it up here, okay, this is the beginning of the year. This is January, okay? Today is December 28th, and this was where price was right when I took this screenshot. Now, it's not by chance, okay, that price is sitting right in the center of the entire year's range of where it's been, all right? But let's use this as an example. And I just want to ask a very simple question. Think about your own portfolio if you're in Bitcoin right now. If you bought Bitcoin below 48.5, are you happy today? And I'll switch it. If you bought Bitcoin above 48.5, are you happy today? This center line here, this 50% line, divides what I like to call the premium and the discount price. If price is at a discount, I'm buying. When price is at a premium, I am selling. Okay? And if it happens in a month, then that's what happens. If it takes a few months, that's what happens. But you have to understand, when price creeps into these areas, the actions to take and things to do. So let's go ahead and draw this out on a live chart, and I can show you guys how this applies, right? And ultimately, I can dive deeper and deeper and deeper into this, but this is a baseline example. Just get the idea of how this works. All right, so let's dive into the charts. What we're looking at right here is Bitcoin daily chart. And what I'm looking at is pretty much the entire year's range of 2021. All right. Now, the way that this works, and when I say use discretion when you're looking at your range, right? Being that I'm going to be playing this as a hodl, I'm looking long term. So I want to zoom out, to a fairly decent amount of price action that still has a long-term perspective. And a daily chart, right, is a good way to kind of align that. You could also do the 4-hour chart, but you're going to have a lot more candles to deal with. You're going to have to squeeze this price in a lot more. All right, so what we're looking to do is capture the year, right? So if I start at the beginning of the year, which is around here, all right, January 1st, 2021, we see first few days of January, we had a rally. And then out of nowhere, we had a dump, okay? But this dump essentially set the low for the entire year on January 4th. So what we're going to do is we're going to take a Fibonacci, right? And we're going to draw from that bottom to the year's high, which was 69,000, which took place on November 10th. Okay. Now, this encompasses the full year. In order for us to find the range, right, and sort of outline this, we're going to use a horizontal line. All right. And we're going to draw one at the very top, one at the very bottom. Okay. Now, this is the range for the entire year. Price never broke out of this range, okay? So it's very valid. When these lines get violated, things will happen, okay? Just like when the all-time high gets broken, things are happening. If we were to break below 27,000 for Bitcoin, the world would be ending, right? For most of us. But, right, how do we outline this to make it make sense? Well, you see this white line here? This is the 50% mark of this fib. And if I zoom in a little bit, right? If I zoom in a little bit, I can start to see how some of these candles play along that 50% line, right? So let's just scroll down. And what I want to do is find a candle that kind of lines right up with it, right? Either the high, low, open, or close of any candle that lines right up with it on that 50%, right? Because I want to keep my magnet on. So I think I see one here. Where was it? Right there. Okay. So I'm going to place my line there, right? And if you're off a little bit, you know, don't really worry about it. Don't sweat it. Of course, you can kind of zoom in, blow this up more to get the most accurate number. But for a long-term perspective, you're not playing by, you know, a couple of dollars here in terms of accuracy, right? You can be a little off. So once I have that 50% line, right, what I'm going to do now is readjust my chart, and I'm going to come to the top and drag it down to that 50% line, right? I want to sort of line that up with the magnet. Where are we? Right there, okay? So we're going to line that up with the magnet, and then we're going to do the same thing, right? We're going to find that white line on our fib or wherever your 50% line is, right? Your color may be different. And again, we're going to look for candles and see how things align across that 50% mark, right? So let's go down and try to find a candle that lines right up to it or real close to it. I think I see one right there. So I'm going to go ahead and take that horizontal line. I'm going to draw that there, right? Last one I need to draw is at the top. So we'll zoom out again, okay? I'm going to take it from the 50% back to the all-time high. And then I'm going to take the bottom of the fib and I'm going to bring it to that 50% mark there. Now that's going to give me again that 50% line right there, and we'll take the magnet off for this one and just snuggle it up to 50% right there. It's always hard to do live, right? All right, there you go. Boom. Now what we have here, folks, okay, now what I'm going to do is get rid of this fib, take that out the way. I don't need it anymore. What do I have here now? All right, I have the same thing that I showed you guys on that PowerPoint presentation. I have 100%, 75%, 50%, 25%, 0%, right? Now let's just take a look at price action here. Let's just look at what price does between these zones, all right? Now again, these numbers are off maybe a little bit, right? A couple of $100, but again, long-term perspective, that does not necessarily matter, especially if you're playing for the HODL. Now, if I look at this initial range here, right, this is the beginning of the year. You wicked around, right at the sort of lowest point in price for the entire year. And then once Elon Musk said that he's accepting Bitcoin for Teslas, look at how you jumped from this part of the range all the way up, right, into the second part of the range. It exploded through two levels, right? And then what happens? Price comes back down, okay, to sort of reset and retrace so that all of the real market makers and folks can get in. Okay, that's what this move was. All right, now notice price starts to find discovery into higher levels, hits an all-time high, and now it's able to start enforcing things in that range, right? Now, look at how price drops. Where does it drop to? 50% mark. Bounces, right? Gives us hope, and then it crashes directly through that 50% mark. And how long? About 14 days. Right? Very quick move. Now, this was the initial move that had everybody thinking we're in a bear market, but look at where price played. Right at the lower level of all of these levels here, right? Once it reached this low, it bounced. Where did it bounce to? 50% line, right? It wanted to find the market. It found the market, retraced a little bit, right? But didn't violate this too much. And where did it shoot? Top levels to set a new all-time high. Now where is price? Right back at the center of this range at the end of the year. Okay, you can find confluences here. Tons of them, okay? If you zoom in, you can find even more. If you apply dates, you can find even more, right? So this is a long-term way to look at price. Now, how do we set this up to our advantage, right? Because again, this is a HODL. We're not looking at charts all day, every day of the week. Right? So what I want to do is sort of draw out some areas, right? So we're going to call this an area premium, right? And we'll say okay to that. And what I want to do is just sort of, you know, outline my premium areas, right? Just as a mental note, okay? And also for example's sake so that you guys can see how this applies, right? And below the 50 line again is my area of discount. All right. So copy and paste that up. Now I have some clear areas of demarcation, right? And again, let me ask you the question. If you bought Bitcoin under 48K, are you happy today? Right? If you bought Bitcoin over 48K, are you happy today? Right? That's the question. But this right here gives you some areas to work from. Now, again, this is the HODL, so I'm not going to be looking at charts all day. Very cool thing that you can do is set up alerts. right? So what I would do just to set up a few alerts, right? Let's just set up a few, because if you're not going to be watching the chart all day, you know, TradingView is a really good website that'll send you alerts. You know, they'll text you, they'll send you an email, whatever you want, right? So I'm going to add an alert here at the 50% line, and being that price is falling from top to bottom, you know, I want to know when price is crossing that 50 line, right? Because that's going to change my bias from a buyer to a seller. I just need to know when. So if price is above it, I want to know when it's crossing below it. When price is below it, I want to know when it's crossing above it, right? So the alert name could be, you know, price crossing the 50. I already have it lined up there, right? And I can give myself a message, right? So if price is crossing from the top to the bottom, this becomes a buying opportunity, right? So look to buy. When I buy, completely up to me, but price is in the zone where I want it to be, okay? So I'll create that alert. Next line down, I'll go ahead and create another one, okay? Now, price is at the 25% mark here, right? Price at 25% line, crossing 25% line, okay? Now, it'll be crossing from the top to the bottom. So what does that mean? Chances are price is in a bear market. Everybody's sick, right? Nobody wants to talk about this coin anymore, right? The volume's going down. Everything is bad. Perfect time to buy. Perfect time to buy, right? So if price does that, I'm putting in buy ASAP. You see how my message is different? All right, I'm really ready to go at this point, okay? Now I have two lines set. Last line down here, you can mark an alert for this, but chances are this means run for the hills. You know, like you can buy back in, but price is probably going to find more discovery. It's going to probably keep going past this line. All right, because you've crossed areas of no man's land and price is in discovery, so it can go as low as it wants to go at that point, right? But these are the two lines you're concerned about. Now again, just like I set lines below, I can set lines above. So I'll set an alert above as well. Right, so this is the 75% mark. Price crossing 75%. And my message would be sell something. The name of the game is to take profit, right? Well, when it reaches the all-time high, here's what my message would be. Price is crossing the all-time high. Sell 80%. Whatever's in my portfolio, I'm going to drop 80% of it after price crossed the all-time high. Then the next strategy is to leave that rest of the 20% in and keeps running, right? I can keep something in the market. But if it starts to retrace, just like it set an all-time high here, set a new one there, and then said bye-bye, at least my entire portfolio isn't in for the ride. And once it comes back to discount, I'm ready to buy again with a lot more dry powder, right? So ultimately, guys, this is the strategy. This is the way that you look at this, right? And if you're a hodler, right, I showed you how to set this up in about 10-15 minutes, guys. That's all you need. And you can set this up on any one of the cryptos that you're looking to invest in, right? I'm not going to tell you what to buy or what to sell, but I will tell you when to buy and when to sell. And I don't even have to look at your chart. If you can do this, you can do it, all right? Now, I want to give you guys a couple of warnings here. Not every chart is the same, okay? So what I'm looking at here is Dogecoin, all right? Now, I'm not saying Dogecoin isn't the same as Bitcoin. We all know that that's clearly apparent. But what I'm trying to get you guys to understand more about is the actual structure of the chart and when the chart actually began. So the Dogecoin USD on Coinbase, right, starts off with a major dump, right? So you can't really draw a range from here because this is inconsistent with actually what's been going on. If I can look at this, this is the middle of the summer, okay? I need to zoom out a little bit more, and so I would need to go to the Binance US chart to get a much better perspective on Doge, right? And so here goes that dump, right? Here goes that dump. Where is it? Yeah, right around there, right? So this is where, Binance is showing Dogecoin USD. And this is the Binance chart, right? So you may see some differences between this and Coinbase. But ultimately, this is a much better perspective, right? And I would try to do this on whatever exchange I'm trading on. So if I'm on Coinbase, right, if I use Coinbase a lot, I'm going to use the Coinbase chart, right? If I'm on Binance, mostly I'm going to use the Binance chart. If I'm trading on Bybit, I'm going to use the Bybit chart, right? Be smart about that. Don't use contradictory charts because they'll give you different readings from different brokers. All right, so this is the one that I would use for the range. And again, I will find the high to the low price. And then from there, I would know, right, that basically Doge, just looking at this and having this perspective in mind, I know Doge is at a low point in price, even if it was to fall further, right? There's a lot of exciting things happening for Doge. So if it falls back to 7 cents, guys, it won't be there for long. And what would you rather have? A decline from 17 to 7 or from, say, 50 cents or higher to 7? You be the judge. Hopefully, this has enlightened you guys to take a look at a different way to kind of view when to buy low, sell high. If you like this content, go ahead, hit the like button, hit the subscribe button. I will be bringing more of this. It's your boy Maestro. Welcome to The Long and Short.
Buy low, sell high, that's my motto. I may just quit my job at the power plant and become a full-time stock market guy.